welcome back. We have Varun Lochab of HDFC Securities with us. Welcome, Varun. This is the first time you're coming and speaking to us in your new avatar. But we have to start with HUL. Before we ask you the first question on HUL, can we listen in to a couple of points that the management made yesterday at the conference call?
Now, if I really summarize looking ahead, I think the outbreak of COVID-19 has disrupted the business massively in the short term, and the road to new normal is a bit uncertain. In this unprecedented times, it's a bit difficult to have a good sense of the demand or the market growth prognosis, and we'll have to wait for a little bit of time to really get a sense there.
As the supply issues have improved, the demand also correspondingly went up for categories like skincare. As far as color cosmetics is concerned, many of the stores which are very relevant for this categories, like they are in the malls and all, or they are in upper end modern trade stores, and those stores have remained closed, so the demand has been impacted.
Okay, so those were some of the points that the company made. But as Anuj pointed out earlier, 80% of the portfolio has seen 6% growth. Varun Lochab, good morning again. Would you take heart from that, or would you worry that this is pent up? What's your extrapolation of the result?
I think numbers overall for HUL were largely in line. If you look at qualitatively, they were not, very strong, because this, revenue decline of 7% and 8% volume decline on a like-to-like basis is after a 6% sort of a pipeline upstocking. So destocking had happened in March quarter. So underlying consumer demand doesn't look, very strong and encouraging. And if Unilever has not lost market share in its key categories, which means there is a problem with the aggregate demand, which has been our thesis that it will take some time for aggregate demand to come back. And similarly on near-term demand outlook, or even say the rural strength, the management commentary wasn't very upbeat, and I think rightly so, because I don't think products like FMCG will do extremely well in rural, like we have seen for some of the other categories there, where there was a pent-up demand. For FMCG, the pent-up demand will be less. So I think we are not out of the woods as far as the overall aggregate demand scenario is concerned. And
Okay.
I think levers results and management commentary largely reflects that.
Okay, Varun, good morning. In that case, what's your view on the stock? We've seen the rest of the pack, for example, Britannia move to all-time highs. On lever, you think it will, in that case, underperform, or you have an outperform rating here?
No, so we have a reduced rating given very stressed valuations and the fact that our estimates are significantly below consensus for FY21 and 22. So on our numbers, it's already at 55 times FY22 EPS, and that too with some downside risk to EPS. So unlike say Britannia, in which case there is a significant market share gain from the unorganized sector, and so even within organized sector, the smaller biscuit players have been struggling with supply chain. Then you have a lot of these bakery retail shops which are closed, and therefore Britannia gained significant market share. Even in biscuits, it's not that aggregate demand is up 27%, but it's a category like for levers, home food categories, we have seen a positive demand scenario. So I think Britannia is slightly different. Out there were significant EPS upgrades, and that is a classic lockdown play. The longer the lockdown extends, I think Britannia will at least benefit on the earnings side, even though valuations are high even out there after the recent run-up. But Unilever is not a big beneficiary of COVID as such from a demand perspective.
Okay, got that. Varun, stay on, because we want to discuss the Axis Bank numbers as well this time around.
Varun Lochab is also with us. Varun, your thoughts on how to approach Axis Bank now after the numbers? It's a stock which has sort of underperformed the banking pack. How would you view this stock now?
I think we were quite impressed with the numbers in the in the context of the economy. I think numbers delivered on most fronts. If you look at NII growth, PPOP, and even say moratorium numbers, though I think as the other speaker said, the moratorium numbers you can just look at it directionally, and I think rather than focusing so much on the absolute number, given slightly different definitions across banks, but clearly, we believe, banks as a space, and some of the large banks we have been overweight in our model portfolio, including both ICICI and Axis. We are quite comfortable owning them from a risk-reward perspective over next 12 to 18 months, as the unlock happens and economy gradually comes back. We are in the camp that it will take some time for things to normalize. Getting to 80%. Sort of a level at economy would be easier, but then to go above 100% would be a slow grind. But nevertheless, I think banks, especially the large, well-capitalized banks like ICICI, Axis, offer a good risk reward. Street has been overly negative. Market has punished them hard, given that they are leveraged businesses and economy facing. But we believe in some of the, so in our model portfolio, we have a few quality domestic cyclicals, as I were to look at it. And, banks out there look quite good to us.
Okay. Well, actually, this is not by design, but accidentally we have one analyst from HDFC Securities, one from SBI Caps, and one from Yes Securities, Anuj, and all of them are analyzing other banks. Okay. Well, very